FHA loans are the undisputed champ when it comes to expanding homeownership opportunities. It allows credit scores down to 580, lenient requirements for those with large debts or lower income, and cheaper mortgage insurance for those without perfect credit. Can FHA make you a homeowner? Let's find out. So what is an FHA loan anyway? FHA is simply a mortgage program that's meant to give more people an opportunity to become homeowners. It's insured by the federal government, which allows lenders to issue loans at more lenient criteria. While FHA loans are used by people across credit and income spectrums, they're best for those without perfect credit, high income, or strong employment. For example, conventional loans technically have credit scores down to 620, but with that score, it could be hard to qualify. And if you do, mortgage rates and mortgage insurance are going to cost you a ton of money, but FHA has similar rates and mortgage insurance fees for all types of borrowers. And many people won't qualify for conventional loans at all due to higher debt, lower income, or shakier credit. FHA, however, could be the loan that finally makes you a homeowner. Now let's take a look at some common guidelines for FHA. FHA requires just 3.5% down. This can come from personal savings, a family gift, a 401k loan, or down payment assistance. The minimum credit score is 580 with 3.5% down, and as low as 500 with 10% down. Some lenders may require higher scores, so shop around. Also keep in mind that the lower your score, the stronger the rest of your file should be to receive an approval. For example, someone with a 585 score should have a high income compared to their future debts and monthly house payment. Your debt to income is your total debt payments compared to your before-tax income. For instance, if you make $8,000 per month and your monthly auto loans, student loans, and future house payment are $4,000, you'd have a 50% debt-to-income ratio. This could work with FHA in some cases. However, for conventional loans, it's a little bit high. You'd probably have to have more like 43 to 45% debt-to-income ratio to qualify. As far as employment, FHA loans require documentable income from an employer or self-employed source. If you have a typical job, you probably just need W-2s and pay stubs for your lender. If you work for yourself, you'll need 2 years of filed tax returns. The lender can typically only use your bottom line income after business expenses. FHA loans require mortgage insurance. This mortgage insurance is usually permanent until you refinance out of FHA into another loan type. Typically, this equals 1.75% of the loan amount upfront and 0.55% per year. On a $300,000 loan, this is $5,250 upfront and about $140 per month. While that monthly payment might sound like a lot, conventional loans may require up to 3 times that much for borrowers with credit scores below 660. So while mortgage insurance is never fun to pay, it's almost always required for mortgages with less than 20% down. FHA just gives you a steep discount on it, especially if you have lower credit. You have to use the home as your primary residence. No second homes or investment properties, but you can buy a 2 to 4 unit home and rent out the units that you don't live in. There are also no rules against renting out a room in a 1-unit home. No loan is perfect, and FHA has some drawbacks. Perhaps the most significant one is a perception by sellers that FHA offers are weaker than conventional ones. You have to disclose your financing type on your purchase contract when you make an offer on a house. Unfortunately, sellers often disregard FHA offers up front in favor of conventional ones. However, if you keep trying, eventually you're likely to get an accepted offer, even using an FHA loan. Additionally, some properties may not pass the FHA appraisal process. Safety issues may be flagged in the appraisal. The seller must be willing to fix the issues before the sale goes through. If you do find a home that's beat up, FHA offers its popular 203K feature. You can use it to fix most issues you encounter. Not only that, but you can do cosmetic repairs too. These loans are more complex, but they do come in handy if you find a house that no one wants because it needs work. So how do you get an FHA loan anyway? FHA loans are available from most lenders, banks, and mortgage companies across the US. A good first step is to contact a lender and request a pre-approval. You'll be guided through the steps to apply. To make things easy, go to mortgageresearch.com and get matched to a lender.